We start with a check on the crude prices, which have fallen more than 1.5%, its steepest fall in nearly 3 weeks. An unusual bailout package for Cyprus contributed to this decline. In an unprecedented move, Eurozone finance ministers have approved a 10% or rather 10 billion euro bailout for debt-ridden Cyprus. But unlike in the past, this rescue has sent world markets into a tizzy and angered all parties involved. The bailout seeks to levy a tax on all bank deposits in Cyprus. The logic is that the banks hold a large part of this debt and they should be made to pay. But the money comes from ordinary depositors and not the bank itself. This news has potential to trigger fresh turmoil within the Eurozone, which is already reeling under the debt crisis. It has also impacted the euro and other riskier assets such as Asian shares, equities and commodities as well into the market. Meanwhile, the gold prices have zoomed, hitting a $1,600 per ounce mark as investors rush to buy into the safe haven metal. However, a firm dollar and global economic recovery signals contain the rally. All eyes are now on the FOMC meet, which begins on Wednesday, where the Fed is expected to continue its easy money policy. Gold on your screens, good $12 off again coming in and $1,600 per ounce is holding. The base metals have taken the biggest knock in trades on the back of the controversial bailout proposals for Cyprus. Both copper and zinc are trading at 4-month lows on the London Metal Exchange. To discuss the details of the story, let's go across to Nick Brown. He's head commodities research, Natixis, and he joins us online. Nick, hi, welcome to the show. How have you read the impact coming in from the Cyprus bailout, and how much of a further decline or an impact are you expecting on the base metals?
Hi, it's a pleasure to be here. The Cyprus bailout is very interesting indeed, and the EU has come up with a pragmatic solution to what is a very special case. Cyprus is a small offshore financial centre to all intents and purposes. It's got a high degree of leverage in terms of the size relative to the Cyprus economy. The problem with the EU's proposed solution is it's in danger of setting some potentially unhelpful precedents. If Cyprus agrees to the bail-in, then it rather undermines the concept of the banking union, which the EU was trying to instill across the area. And it would not be unreasonable for
Nick, we will try calling you back. That's a bad line we're talking to you on. But let me also get Vijay Bambani in with his sense on what the markets have seen during the day today. Vijay, what's your sense coming in for the whole base metal pack? I mean, there have been concerns from China. The LME inventories are at multi-year highs, and now this.
Well, Manisha, if you recollect, it's been at least 2 months since I've been advocating a hands-off approach, and sitting on the fence is the words I've been using for the outlook on industrial metals as well as energy, because the charts were indicating sluggishness, a total lack of buying enthusiasm, and I've been pointing that out that the previous swing highs are not being overcome. Now here you have a situation which is basically unnerving sentiments in an already stretched kind of a scenario. Now, I'm not saying that this is as bad as the currency crisis of 1997, but some amount of the memory effect will come into play here as traders or investors who've been in the markets for a quarter of a century or more like me will basically come and draw conclusions from what they saw in the past, and it's not really looking very rosy, because here's a situation where you cannot withdraw your bank deposits without being taxed for no fault of yours. You have currency turmoil. You have a business scenario which is essentially showing a truncation in the GDP growth. So I think it's going to boil down to deleveraging across all asset classes. You will see people converting their financial positions to cash, rather than holding any kind of paper investments, or definitely not leverage positions. So in the next few trading sessions, I expect deleveraging across all asset classes, and that would be the primary driver for the market trends. And anytime there is deleveraging like this in an extreme scenario, I think prices do tend to slide down, and that's what I expect in the coming 2-3 trading sessions minimum.
Well, that's the impact that we have seen in the prices already. But getting Nick Brown back into the conversation then. Nick, your voice wasn't very clear. The line wasn't good. But what were you saying? I mean, how do you see the base metal prices going forward now?
In terms of Cyprus factor, Cyprus is a relatively small player within the EU. The dangers, as I was trying to say, is that it sets a dangerous precedent. If you agree to a bail-in, it undermines the concept of the banking union, and it would not be unreasonable for depositors at other peripheral banks to take fright. If Cyprus rejects the bail-in, effectively it's choosing to leave the EU. Now that's not supposed to be possible, and again that could result in some fairly substantial dislocation between sovereign spreads across Europe. So although Cyprus itself is very small, it's a very special case. It isn't something that should be a major concern to markets around the world. There is the danger that you set a precedent with this bail-in, either if you agree to it or if you reject it, that could undermine problems elsewhere in Europe. I mean, for a long time now, the metals markets have been able to trundle along happily without worrying about European downside risks. Since Draghi introduced the whole concept of outright monetary transactions, markets have largely been able to forget about the problems in Europe, but they clearly haven't gone away. And what Cyprus has done in a very big way is to remind the market that there are quite significant downside risks in Europe. So that I think is the main negative to the markets at the minute.
Nick Brown, your point is well taken. Well, that's a view coming in really from the international markets. We have seen the base metal prices continue to decline even as this hadn't come into the markets. With this, it just deepens the sense on how big the concerns are still coming in from Eurozone and the impact clearly on the prices on your screens, nearly 2% and more of a decline coming in across base metal prices. Let's also get in Vandana Bharti. She's Assistant VP, SMC Comtrade, and joins us in Delhi. Vandana, hi, what's your sense on what's happened with Cyprus and how do you look at the industrial commodities reacting today?
Manisha, actually market was waiting for a selling trigger because we have seen that how inventories went up in all warehouses and all, and dollar index it was moving up. So finally we got a selling trigger from Cyprus. It was Cyprus, and if you see the monthly chart of any base metal here, whether it is copper, nickel, zinc or lead, the rally was looking very tired and now it got a trigger. So for coming time for 1 or 2 months I am bearish in base metal because dollar index I'm expecting that it may touch 83.5 or 84. There should be a strong buying in dollar index, and apart from dollar index I'm expecting a safe even buying in gold as well, though the upside is very limited. But for base metal and for crude oil I'm very bearish for say 15 to 20 trading stations.
Vandana, you mentioned about gold, and we have seen a bit of an uptick coming on for that one on Friday and today in the Asian and the European markets as well. What kind of an upside do you still see left or remaining for that one?
I see 1610 is the immediate resistance for this gold and COMEX, and for domestic market I'm expecting a level of 29650 for immediate resistance here. But for if we talk about the 4-5 trading station, I'm expecting a level of 29,900 for Indian market. For COMEX it should be 1620, $1622 mark.
Vijay, what's your sense now coming in for the precious metals? Because the turnaround has been quite strong, but are you looking at some levels as well before you start convincingly buying into the space?
Manisha, I'm bullish on silver, and relatively speaking, I have been advocating buying silver in the physical form from somewhat higher levels. I remember having allocated tranches of first 20% and then 10%. I don't really mind allocating 20% more at current levels. Of 55,500 MCX plus VAT and delivery charges on the street. I think what will happen is in the absolute near term there will be a turnaround, and possibly there will be about 2.5 to 4% of a bump up in silver prices, and that's where I would basically start to watch out the prices close to 57,500 and see whether there's selling pressure coming in. If not, I think there could be a gradual creeping upthrust in silver, barring which, if it was to correct from there, I think 52,000 is where the next support level would come in, and I don't really mind allocating further 10% to deliverable investments at 52,000 plus 1% VAT in physical silver. In terms of gold, I think the rally would be a little more patchy because of local considerations. You have the price discovery mechanism in the country being susceptible to higher import duties, as well as the pulls and pushes of regulatory intervention. So my guess is gold would be bullish only above 29,975, if not 30,000. That's where leverage buying and momentum players would basically get into the mood of expanding their risk appetite. Failing which, if gold was to slide below 29,100, there would be a limited downside, but recovery process would then get prolonged. So my guess is silver is a place to hide in the current scenario.
All right, point taken. Vanda, now let's talk about the energy space. How do you look at that one? Because while we have seen 1.5% decline coming in for the crude prices, it's natural gas which is trading more than 1% up on MCX.
Yeah, for crude, if we talk about very short run, like for tomorrow market, I'm little bit bearish in this commodity. It's just a rebound and rally will be very short-lived, because we can get some positive data from housing sector, and which is a very positive driver for commodities, whether it is base metal counter or crude. So tomorrow we can expect some recovery in the prices near 5070 level, but from higher side, again, I'm expecting a selling pressure in crude like base metal counter.
Vijay, 2% up, 213 on natural gas. How would you want to read that?
Well, Manisha, I advocated profit taking at 209 odd levels. It's gone up from there. And I think any level of 210.5 to 211 would warranty high risk buy again on natural gas. This time around, I would be happy to take profits at 216 odd levels. I think any kind of a decline below the 209.5 or 210 levels would basically indicate the possibility of natural gas prices going all the way down to 206, 207 also. But at this point in time, relatively speaking, as I have been talking about all of last week, I think in relative comparison, it's natural gas which is attracting buyers as compared to crude oil.